Hi, my name is Elliott Prechter, and I'm here today representing Elliott Wave International. You know, I just went on a trip to New York City. I went there to speak at the Foundation for the Study of Cycles, and I touched base with a friend of mine, and we had lunch. And of course, during that lunch, we had that talk that everyone in the investment world has had, where what would we have done if we had a time machine and could go back in time with the knowledge we have now? And that's when I realized, when thinking about it, that I've never needed a time machine. And the reason is because I've had access to insights from Elliott Wave International, and some of the calls that they have made and the opportunities I've been exposed to are so legendary. When I show them to you, you're not going to believe your eyes. These are the kinds of insights that you could almost only get by having a time machine. And not only that, but some of the best opportunities are coming. Let me first pull up a chart of the Dow Jones, all right, just so we can get a broad overview of the U.S. stock market. Now, when I first started getting interested in markets, it was right here in the summer of 2006. That's when I got my first job out of MIT. I was working at Microsoft. And as you can probably already imagine, this was a very interesting time to get interested in markets because the markets were about to have their largest deflationary move since the Great Depression. And luckily, I was on the right side of this move because of Elliott Wave International. Let's see what they were saying at that time. So I'm going to go ahead and pull up a chart for you here. This gives you the bird's eye view. At the top, they were saying that aggressive speculators should return to a fully leveraged short position now. And then within just a few weeks of the final low in March 2009, they said, I recommend covering our short position at today's close. But they went further than this. Okay, out of all the newsletters during this time, and there were a few others that also called the GFC, the global financial crisis. But there were none that, in addition to calling the crisis, called every little squiggle on this path. But that's exactly what they did. I can pull up this chart. This was published in March 2009, and it shows you the Elliott Wave labeling. Now, if you're not familiar with Elliott Waves, that's fine. All you need to know for this chart to understand it is that the odd numbers are with the trend, and the even numbers are against the trend. I'm going to tell you, not only did they publish this in real time on March 2009, indicating when the bottom was in place, they were labeling the market exactly as you see here in real time. It was an amazing period. So not only was I able to short the market during these declines, I was able to go long the market during these advances. Now, during this time, I was short heavily the banking sector, and I was using 4-to-1 leverage. So it's absolutely just enormously successful time for me. And it was interesting just going to work every day and seeing my coworkers despondent about the market. And meanwhile, I'm sitting there more excited than I'd ever been. And this period is what completely hooked me on markets and got me very interested, not just in finance, but in Elliott Waves specifically. All right, now what happened after covering at almost the exact low in 2009? And this, again, is one of those time machine questions. If you went back to this low point with a time machine, what would you have bought? Some people may say, well, of course, you'd want to buy stocks. Or more specifically, something like Tesla, or even better, NVIDIA, the number one performing stock throughout this bull market. Of course, there's an even better example. We all know the holy grail, the one investment that's outperformed everything, and that is Bitcoin. If you could go back in time after shorting the banks during the GFC, then the next move, right, would be to buy Bitcoin, wouldn't it? Well, guess what? In 2010, right around this area, when Bitcoin was trading at 6 cents, that's exactly what we recommended. Go over to ElliottWave.com here. If you click markets, you'll see there's a section here called cryptocurrencies. Click on that, and you can see we first recommended Bitcoin in 2010 when it sold for 6 cents. And right here, we have a link to the exact special alert that was sent out to Elliott Wave International subscribers. You can click here to read it. And the reason I'm so familiar with this particular special alert is because I'm the author of this paper. Okay, I was first introduced to Bitcoin while I was working at Microsoft. I was on a mailing list called the Investment Club, which at the time I become somewhat of a local celebrity at Microsoft among people on that list because of my recommendations to short the stock market during the GFC. And of course, this was their way, I suppose, of returning the favor by just briefly introducing me to it. But before I knew it, I was on Bitcoin Talk. I was talking with some of the developers, ended up writing this article where I could introduce the investing world to Bitcoin in September 17th, 2010. So let's take a look at this. So I started it off saying this is the future of money. What is Bitcoin? Satoshi Nakamoto, who now, of course, we all think he's probably Adam Back. We're not sure, but I think that seems quite likely, created the first completely decentralized anonymous electronic currency called Bitcoin. We go through the key points about Bitcoin in this article, most importantly, our conclusion where we said it has all the necessary features of money: a medium of exchange, unit of account, divisibility, scarcity, portability, and store of value. As of 2010, one Bitcoin, or BTC, was equal to 6.5 cents. So that was the next big opportunity, was back then to get in on the ground floor of crypto. And we've since this time received many thank you emails from people who've retired early who read this article and have been following us on crypto. And by the way, we continue to monitor crypto. If you go back to that crypto page here that I showed you, let's close this. All right, you'll see we have crypto junctures, and we are still following the crypto markets to this day. So again, shorted the banks in the GFC, went long Bitcoin, the best asset to own during this bull market. Very, very interesting. But what else did we say during this time that would have been really important? You have to actually understand what happened here during the COVID crash, because there was something interesting happening in bonds during this time, a completely different market. So let's go over here, let's click markets, and let's go to interest rates. Because this is what we published back in 2020. In fact, this was September 2020, just right after the COVID crash. Because during that COVID crash, what were people doing? They were buying bonds. And in fact, the Treasury note yield went all the way to 0.5%, the lowest yield in history. And as you can see here, what we did at Elliott Wave International is we recognized that now going forward, we were going to see rising interest rates. In fact, when I spoke at the FSC, I met Peter Borish there. You may have heard of him. Peter Borish worked for Paul Tudor Jones, and they shorted the market during the 1987 crash. And in fact, they credit the call to short that 1987 crash in large part to Elliott Wave International. But more recently, Peter Borish said a thank you to us at the FSC event, thanking us for this chart. Because of this chart, he has been shorting bonds for some time. And of course, shorting bonds from this level has been a legendary move as rates moved all the way up to here, which is one of the largest increases in rates and simultaneous collapse in bond prices in the last 40 years. So clearly, Elliott Wave International has had some amazing calls. But if you missed shorting in the GFC, if you missed Bitcoin at 6 cents in 2010 throughout this bull market, if you missed the opportunity to short bonds at the historically low rates we had in 2020, well, don't worry, because there's always another opportunity coming ahead. And in fact, some of the opportunities that we believe are coming are going to be even larger than the opportunities during the global financial crisis. So in order to take advantage of these opportunities, I recommend going to elliottwave.com. All right, go to our homepage here and just start reading. And with that, I hope to see you on the other side of the next big market move.